Hey everyone, get ready because right now one single stock is holding up the entire stock market. If it stumbles, your money could be next. I'm talking about Nvidia. Wall Street isn't exactly shouting about how dangerous this is, but we've seen this movie before, and trust me, it did not end well the last time. It actually led to the deepest and longest bear market in history. Today, I'm going to show you what to expect, how to get ready, and even how to make some money as all of this unfolds. Nvidia just blew past expectations, pulling in about $46 billion in revenue last quarter, and they're guiding for even more next quarter. They've become the absolute heart of artificial intelligence, powering everything from massive data centers and cloud computing to the next generation of robots. Their new tech is set to fuel automation and self-driving cars. Wall Street is completely gung-ho, with analysts hiking price targets way up. They don't think the AI boom is slowing down. In fact, they believe Nvidia is just getting started. But here's the kicker. Nvidia is now worth over $4 trillion. That's a massive chunk of change. It makes up more than 7% of the S&P 500. This means that when Nvidia even sneezes, the entire market catches a cold. If spending on AI slows down even a little, if tensions between the US and China heat up, or if their profit margins get squeezed, the ripple effect could drag the entire stock market down. Seriously, one company should not have this much power, but right now, Nvidia does. Just imagine this. If Nvidia fell just 20%, the Nasdaq and S&P could lose more than $1 trillion in value almost overnight. That means even if you don't own a single share of Nvidia, your retirement account, your ETFs, your favorite tech stocks, they'd all feel it. That's the real danger of having one stock carry the entire market. Nvidia is both the biggest opportunity and the biggest risk in the market today. On one hand, it's leading the AI revolution and expanding into robotics, automation, and beyond. On the other, its sheer dominance makes the entire stock market incredibly fragile. So, yes, be excited about Nvidia, but also be prepared for what happens when this giant eventually stumbles. The best way to prepare is to look at history. What happened the last time we had a situation like this? Well, there's a precedent, and it's almost identical to the dot-com bubble of the 1990s. Back then, the internet was just starting to take off. Tech stocks were absolutely exploding. The Nasdaq index rocketed up over 500% in just 5 years. And the undisputed leader of that rally was a company called Cisco. Cisco was the Nvidia of the 1990s. It had triple-digit earnings growth quarter after quarter. Its revenue shot up from about $69 million in 1990 to almost $19 billion by the year 2000. That's a mind-blowing increase of over 27,000%. The stock itself moved even more, delivering an incredible gain of over 100,000% in just a decade. Investors had never seen anything like it. Analysts raised their price targets so many times they eventually just gave up. Let's compare that to Nvidia today. Nvidia is up over 37,000% this decade. While that's not quite as big as Cisco's 100,000% run, you have to remember that new rules after the tech bubble made it much more expensive for companies to go public, meaning Nvidia was already a big player when its big growth phase began. Another way to stack these two up is by looking at how much of the market they controlled. At its peak in March 2000, Cisco was worth about $500 billion. The total value of the 500 largest companies was about $12 trillion, meaning Cisco represented 4% of that index at its peak. Today, Nvidia is worth a whopping over $4 trillion in an S&P valued at about $58 trillion. Nvidia represents a massive over 7% of the index, nearly double Cisco's weight at its peak. By almost every measure, Nvidia is following the Cisco playbook to a T. Back then, it was the internet revolution, and listen, investors were right. The internet changed everything about our daily lives. But as always happens, stocks went too far, too fast. Optimism turned into pure euphoria. Wall Street started pricing in perfection. Valuations got completely out of hand, and a bubble formed, which, of course, eventually popped, and chaos ensued. The S&P 500 index fell 50% in 2.5 years when these dot-com darlings came crashing down. The tech-heavy NASDAQ composite fell 78%, and it didn't make new highs for 16 long years. Are we going to experience the same fate? Yeah, probably. But that absolutely does not mean you need to suffer through the eventual crash. Only an idiot would ride the market index down 78%. And sure, it took a while for the tech sector to recover, but other areas picked up the slack big time. Your job as an investor is to put your money in the places with the greatest chance of making it grow. And for me, that does not involve buying companies worth over $4 trillion at the top of a 37,000% rise, trading at about 50 times its annual earnings with about 90% profit margins. That kind of growth will slow down. Competition will definitely drive those profit margins down, and when it does, Nvidia will likely fall 50 to 80%, just like every other leading stock has in history. I won't be there for it. I'll be doing what smart investors did after the dot-com bubble, moving money to better opportunities. Take a look at what happened after the dot-com bust. In 2000, tech was imploding, but utilities were surging, up over 50% in a year. Healthcare and financials also had banner years. In 2003, it was information technology and basic materials. The shale boom delivered huge gains in the energy sector from 2004 through 2007, where investors actually tripled their money on that move. Real estate, banking, consumer discretionary, they all had their day. Even in 2022, in the middle of the worst bear market in 14 years, the energy sector climbed over 60%. And this is just looking at US stocks. There are other asset classes too: real estate investment trusts, gold, bonds, emerging markets. There is always a bull market somewhere. Now, don't get me wrong. I am going to ride the AI wave for as long as it lasts. And sure, I'll probably take a small hit when the party finally comes to an end, just like everyone else. But I will continue to put my money into the areas showing the greatest strength, and I strongly encourage you to do the same. Who knows what that will be in the coming years? Perhaps a shift toward nuclear power will send those stocks on a multi-year run. Maybe inflation will ramp back up when the government refuses to cut spending, and we'll see another boom in commodities like we got in 2020. We could see a boom in manufacturing stocks thanks to trillions of dollars being invested from overseas, or a housing boom due to declining interest rates. Just follow the money. Keep an eye out for areas that are outperforming, because that is where the Wall Street heavyweights are placing their bets. But I'm curious what you think. Do you believe Nvidia is truly unstoppable, or are we one bad quarter away from a market crash? Drop your thoughts in the comments below, and I'll do my best to respond to each and every one of them. And listen, don't forget to like this video, hit that subscribe button, and ring that notification bell in the corner, because I'll be covering both sides of the story, the opportunities and the risks, every step of the way. Thanks for watching, and I'll see you in the next one.